recording. Slide. Okay, everybody with me, see slides, see me, hear me, we're good to go?
Sir.
Alrighty. All right, so any questions, concerns, comments, thoughts on last week before we jump diving in? We got 2 chapters to cover this week. Anybody want to volunteer to just say, keep going?
Let's keep going.
All righty. So we are learning, that's chapter 2. Might help if I start with chapter 1 first. We'll get there. All right, so the role of accounting in society. And this semester I am, because we're going with the new textbook and I'm doing 2 back-to-back, we are just going to use the slides from the publisher. It's going to be basically your textbook, just with a little bit of condensed information. And I'm just using this as the basis of our discussion to make sure we get through everything. So now we're in chapter 1 and we're discussing just exactly what is the role of accounting, what's its purpose, and what do we do as accountants. It's one of the oldest professors. We can go back to Egypt and having different bean counters, but it has progressed since then, and we do have a lot of different roles just depending on exactly where we're at. So the 2 major distinctions in accounting is between financial and managerial. We'll go through that and how to apply it. And then we'll kind of go into when you're applying it, what is the purpose? And so I've told you in this class that you need to be thinking of accounting as a foreign language. That is the language of business. And the reason we say that is because of the fact that as you're going through this really is the terms, definitions, sentence structure, grammar, all of those things is how we present the economic sustainability of an entity. In this class and in your textbooks and from future presentations, we will be discussing accounting in terms and that entity in terms of a business, but at the same time, that entity can be anything. It can be a person, it can be a group, it can be an organization, it can be a specific activity, anything that we can draw a circle around and say, this is what we're focused on. The 2 major purposes is financial accounting and managerial. And the big differences between these is basically when we get into our users is financial accounting is going to go to anybody outside that circle, and managerial is going to go to anybody inside that circle. And the reason why that's a big distinction is because as soon as you go outside of the circle, they don't have the same sets of facts and information and day-to-day responsibility as those inside the circle. And so we can't treat them with that same sort of regard. And so because of that, financial accounting is going to have a lot more scrutiny. It's going to be more detailed. You're going to have a common set of goals such that the end user, the person that's reviewing this outside of the circle, can go to any circle they want and use the same definitions, use the same thought process, use the same forecasting methods, anything that they need to go through that. Managerial, we still need to look within the company, and within the company, we're going to want to see things a specific way. We're going to want to focus on specific aspects so that maybe we can control these versus others. And so managerial won't have the same set of rigid guidelines, but at the same time, there is a normalcy that you'll learn and a more efficient way of presenting that information. And we are talking about the same things, but just you want to realize which group you're in. So this class is going to cover financial accounting. We're going to go over what those rules and regulations are, the purpose of the end result, and then your Principles 2 class will take on the managerial aspect. Any questions? And so that's kind of the internal and external definition as well. So any questions on that part before we get to what is financial accounting? Because those are two very important distinctions. Let me take a quick second. Not everybody talk at once. Sorry, Luke, you're cutting out really bad.
Now,
Right, Luke, I'm gonna put you on mute. If that was a question, can you put it
go
in the chat?
back to the slide with the definitions real fast? You hear me now? Hello?
Yeah, now I can hear you. Oh, and then you went to mute. Sorry, was it just me? Did anybody get what he was saying?
No, he was breaking up.
Okay, but I'm still coming in clear. It's not my connection.
You're good.
Okay, so Luke, if you can put that in your question in the chat, I can go back to that. Okay. So there's the definition of the financial and managerial. And then again, these slides are available on Blackboard if you need. And then the internal and external, these are the definitions. So again, these slides are just a condensed version of your text. And then there's the, on Blackboard, I've attached these slides themselves. So if you're just looking for definitions, just to put on your note card, go with that. But in general, does that kind of, does everybody understand a bit on those differences between internal, external, managerial, and financial? All right, so then we're gonna, so again, that's the high level. Here's the accounting is broken up into major components, financial, managerial. This class is gonna focus on the financial side, which is mainly the external reporting. So the end goal of the financial accounting is going to be the financial statements. So the next slide we're gonna get into, the next PowerPoint that we're gonna get into is what these financial statements are. But they go as the income, equity, balance sheet, cash flow, and disclosures. There's a reason that they're always going to be kind of presented in this method, and we'll kind of get into what these for. I told you that the difference between accounting and finance is really just the time component. The accounting information is going to be historical, and it's going to be everything up until this point. But there are certain items where we're going to list as of this moment based off of a future reference. And that's going to require some estimates that we get into, but not as much as your finance course where you do full-on projections. Because of the fact that I said we are going to be presenting to external sources, the external sources want to be able to view our information without having any specific training on our company. And so in order to do that, think about how many different languages there are out there. And unless a person goes and learns each language, they're not going to be able to go from country to country. So in accounting, we have one set language, and basically we'll get into the second one. But the main one that we're going to discuss today is GAAP. And that language allows you to go into any financial statements. At one point, we'll go into the SEC's website, and I'll show you where you can get every publicly traded financial statement. And all of them have to follow these set guidelines. So if you see a number on one company and you see the same, so if you have cash reported here, cash reported there, the definition of cash on both of those is going to be the same. It's not going to be what we call cash, because I call cash what I have in my wallet. But the definition from a GAAP perspective of cash is going to be the same, and that includes all your bank accounts. GAAP is set by FASB, the Financial Accounting Standards Boards. We'll go into a little bit more in depth about how they came to be and what they are, but know that this is a quasi-government entity. So they are actioned by the government, but they are a private standing board. They are people. They go through a lot of the different news reports and figuring out what are the hot topics and where are accounting and investors not talking on the same language, and they go through how to create a more comprehensive definitions. So as an accountant, our job is to verify what the activities and events are of the entity. So what that means is that we're looking through what we call a transaction, which is some event, something occurred. So either we had a sale, either we purchased assets, either whatever happened, something had to occur. And our job as an accountant is to figure out how did that action or event impact the economic entity, and how do we recognize that transaction. A lot of today is automated. So used to, you actually had pen and paper. Excel is modeled after the graphing design because people used to go in there and have pen and paper. Then we went to Excel, and now we have these online tools in the cloud, and it is getting more and more complicated. But at this point, everything does seem to go through what we call a financial accounting system. And if you've used these, it's using the same language. You have to choose whether or not you're going to use GAAP or IFRS. You're going to have some type of definitions here and there, but for the most part, it's going to be standard, no matter what entity you put into those. On the managerial side, again, we won't get into most of this because of the fact that you're going to have an entire class dedicated to just managerial accounting. But the key to note is that managerial is for internal users. The purpose of managerial is so that way the investors, so the management can decide what happens if what do they need to do in order to make a decision? So are we going to purchase this asset? Are we going to go into this market? Or am I going to invest in this type of trade? That is the decision we're trying to make here. And managerial will switch that. All right. So this is kind of just a general slide in order to, again, the goal is to communicate to those outside or inside the firm on what we're using. So finance is going to be what we keep track of here. There's going to be a set frequency. It's going to follow a set guidelines. It's going to be for external users. And we are going to have to audit this. Managerial is a lot more as needed. And so you're going to have internal users, no GAAP. You can have money or non-monetary transactions, and we don't need to audit it because, again, everybody that's using this information is within the company. Okay, so that's the key to note on this slide and where to go from there. All right, so then we get into, well, what is a business and what is the actual entities that we're trying to talk about here. And so we break it into three different, and I don't really pay much attention to this because at this stage, because as an accountant, everything is a widget. It doesn't matter what your client is doing. It doesn't matter what industry you're in. There's all a similar set. So certain activities are going to be more predominant in certain industries. But at the end of the day, accounting is accounting. All right, so when we're in financial accounting, you'll hear the term stakeholder. This is a wider view than just your shareholders, but a stakeholder is going to be anybody that has a direct correlation to the company. So whether you're an owner, whether you're a lender, whether you're a vendor, customer, employee, we consider that all stakeholders because they have a stake in the continuing existence of this business. So when we prepare financial information, financial statements, the goal is to make sure that all of our stakeholders are represented and that the information is consistent enough that we can go from each of those and they can all get the same information. Okay, so you can't have a business without funding. And so there are different ways of funding. And the goal and the key here is that cash is good and we want to show positive cash, but we need to be able to distinguish where that cash comes from. And that's going to be key critical components when we get into the cash flow statement is breaking it out between our operations. So what did the company itself do? What is its main purpose? Then we go into debt, which is borrowing without giving up ownership, but showing a long-term liability, or selling our ownership and getting equity. So those are three distinct ways of getting the cash to start the operations. All right, any questions up to this point? Again, we're trying to go through the general overview of accounting first, and then we start getting into the specifics of it. So I went through that pretty quick just because I like to get to the point where we're actually talking about accounting. But I will take a quick pause for any questions.
Quick question.
Yep.
What's the difference between financial accounting and managerial accounting?
So the financial is going to be for external users. The financial accounting is going to be with this slide shows the overall differences. So financial is going to be focused on external users using financial statements that are under a common language. We're going to issue on a regular basis. We're going to have, we're only going to be focused on what can be in terms of a dollar value, and we're going to require an audit. So because it's going to go outside of the company. Managerial, we're same language, we're using the same terminology, but we're going to use it in just a little bit different manner. We're going to focus internally, and we're going to be looking at specific functions in order to be as needed. We're not going to have any overall guidelines because each company is going to be able to determine what do they need in order for their managers to make the decision. So that could be using dollar value or non-monetary transactions. And we don't need an audit because, again, only those that are inside the company are going to be relying on this information.
Got it. Thank you.
All right, so the questions here at this point is, all right, so now that you have a general idea of accounting, where could you position yourself as an accountant? So I mentioned my my progression. The really who can be accounting here and what characteristics do you need to be? They're all here. I think any of these skills are gonna be pretty general in terms of if you have them, you can do anything. The key that I would focus on as an accountant is the problem solver and analytical skills. The I'd say majority of my job is solving a puzzle. With accounting, the debits equals credits. Therefore, there's a set equation. If I'm missing a piece, then I just need to find the other piece that goes with it. And a lot of my job is finding one transaction and pulling the thread until the rest of them follow suit. In terms of education, there's going to be positions for anything. I mean, you have simple data processors that just enter invoices and apply cash and do the same accounting related transaction day in and day out. For that, you typically do need a bachelor's degree just because of the competition out there. But at the end of the day, any level will do. But what we're hoping for is to, and again, what I told you, the U.S. is more focused on retaining the management side of that. And so for that, you will typically need a degree. MBA is helpful in the overall business. I don't have an MBA, I just have a master's, and I've done pretty decent. But that's because of the CPA that I have. That one, the CPA is a big deal if you're going to get into public accounting, because again, if you're going to go into financial accounting, dealing with external views, there is a set guideline, and you're in the public dominance here, and because of that, you need to show that you're qualified, and so that's one of the keys if you plan on being into the accounting part. But there are a lot of different degree paths or career paths. So I took the auditing. From auditing, I'm now into financial accounting at the corporate level. I don't do tax. Do not ask me about a tax question. Luckily, my brother is a CPA and he does my taxes. For a while, I did consulting, but the job of a consultant is basically on any of these things, the consultant is going to be an outside party that comes in and gives it a fresh eye, or maybe a special project that's short term that needs to be addressed. Information systems. So it's been very helpful that we now have accountants who also have IT, so they can help build these QuickBooks and build these accounting software systems that help make the day-to-day processing side of it a lot smoother. Financial planning. With financial planning, it's either on a personal level or corporate level, where your goal is to take the accounting information, figure out what a normalcy is based off of what industry you are or what your set goals are, and then plan for that out into the future. Managerial. So managerial is talking about figuring out what inventory you should order. How do you set up your vendors right next to your customers in order to get a more efficient method, and it's reporting what were you expecting to have in terms of a price variance or a volume variance. Why are our numbers better this month than last month? Do I need to pay my employees more? Am I paying them too much based off of the output? Those type of questions. And entrepreneurship, I know that's the buzzword, and I know that tends to be the direction a lot of people tend to go to. For those that are self-starters and want to go out, that's a great route, but you need to protect yourself and know what language everybody else is talking to. And if you have a great idea and you have this great company, you want to know that you're getting what it's worth whenever you start putting it out into the funding and start giving out pieces of that. Any thoughts and questions and just general ideas on the different career paths available to you here?
Could I ask what did you get your master's on?
So the master's I have is the a 1-year tack on that the LSU does. Technically it's a master's in science with the focus in accountancy. Basically, it's just a 30-hour course in order to add on to get the 150 required to sit for your CPA. I assume all of you are going to talk more when we're in person next week. Okay, so we've gone into those. That's the different jobs. The question again is who hires an accountant. So I'm over here right now. A corporation hired me in order to prepare their financial accounting information and present it to third parties. At the same time, we get our financial statements audited. So we do need public accounting. So public accounting firms out there are hiring to help audit. They're help to prepare your taxes. They're helping to consult. These can be the big four, or this can be your mom and pop shop. This can be your technically H&R would go into this bucket for those that are there to serve the public in terms of applying. So I am getting the running out of time. So if we're going to kick out in about 10 minutes, just everybody's got to sign back in. Just for some reason, they haven't upgraded our Zooms. At the same time, your corporations are going to be trying to earn a profit for its shareholders. There are not-for-profits out there whose net goal is to give all of its inflows into its benefits of its outflows. They're going to need accountants to figure out exactly what the inflows are, where the outflows going. Are they truly running at a not-for-profit? And government. So there's plenty of work to do with the government. As you know, every year a budget has to be prepared, a budget has to be approved, has to be signed off. There's lots of different routes. Government accounting is completely different in terms of exactly what the rules and regulations are. Because again, the purpose of a government is for 1 year to go into the next politician cycle. So the way that we judge the performance of a government entity is going to be different than the way that we judge a corporation or not-for-profit.
Can I ask a quick question about auditing?
Yes.
Can you be a consultant on your own, or do you have to belong to a company that focuses on auditing?
So you don't need to be part of a firm, but if you are independent, there are certain checklists that need to be performed in order to present yourself as an auditor. So I said that the goal of a financial accounting is to present financial statements. A corporation's job is to present those financial statements. An auditor's job is to verify that those statements are as accurate and reasonable as possible. And the final result of an auditor is to actually sign his name on those reports, and that report gets submitted to the SEC. The SEC does have specific requirements on how to go about being able to sign those reports, and so you do have to be a CPA, you do have to be in good standing with the PCAOB, you do have there's other things that we won't get into in this class, but there's nothing that prevents you from doing it by yourself. Now, at the same time, that is a lot of work. So a corporation gets an entire year to realize what their transactions are, how to go about recording that. And then they get about 3 months to present financial statements. An auditor gets about 2 weeks to sign off on all that. So it does take a little bit more of planning and statistical references that, and we won't go into that quite of detail, but there's nothing that says you can't be independently by yourself, but it's typically not a thing. But there are small, mom and pop boutiques. Like my brother works at a firm of 10 people, and they do local audits for different, mostly for government reporting. They have to get audited for those reports. If you're not, so there's other out there. Again, I had a CPA. That was all that was needed in it for my career, but depending on exactly what interests you and where your expertise is going to lie, there are others out there that follow in the realm of accounting. So again, you have these slides available. This slide is a highlight of what your text is. Now you have me lecturing, going through it. So with all that, is there any other questions on chapter 1? All right, so since we're at a good stopping point, let's go ahead and I'm going to end this meeting. And then if everybody can jump back into it, we're going to go through the chapter 2 slides. And I'll give everybody a few minutes to do that.